Thank you very much for sparing time on what must be an extremely busy morning for you. Before I come to your conference, and we have been highlighting many of the speakers on our channel itself, just a word on how you're approaching SBI now, such a dichotomy between the solo and the consolidated.
Yeah, on SBI, it is a preferred idea amongst the PSU space. To some extent, the extent of difference that you're seeing between the standalone and the consolidator or the subsidiary performance is more or less a reflection of the underlying loan book. So if you look at the standalone bank, you've also seen a fairly large amount of NPAs coming in sectors like iron and steel. And so has been the performance of the subsidiaries. It's just the composition of mix of the subsidiaries was a little bit more towards the large corporate segment, and that is why you saw this divergence coming in the performance. But having said that, I think what we look at SBI is that from here onwards, you're looking at it as a one bank. And ahead of the merger, you would have wanted SBI to have a balance sheet that was closely resembling the parent. And you've essentially kind of removed all kind of differences in terms of recognition on some of these accounts out there. So yes, in some extent, the numbers are quite weak. But I think if you're looking ahead in time, I think this is probably one of the best stocks to own in the PSU pack. Okay. They have one of the best liability franchise, as you've seen in the way they've done on the revenue numbers, especially on the top line.
Okay, one of the best stocks to own, you said. What about Bank of Baroda, Mahesh? Because that is a stock that you've recently upgraded as well. Do you think that the numbers were that good that the stock deserved an upgrade?
Yeah, one of the major areas of positive surprise which came out in the current quarterly numbers has been their growth. Our initial expectation was that you could see a much slower recovery in growth, especially given the kind of changes that the current management was undertaking in their balance sheet. But having said that, you've seen some tweaking around the business model, which allows them to grow their balance sheet much faster. So it gives them a lot more revenues to kind of put back into the business in terms of operating expenses to invest back in the business, and that especially kind of made us a lot more attractive to own at these levels. Plus the fact that the stock did underperform some of the larger players, especially SBI, over the last 1 year, that gave us an opportunity for us to relook at our investment rating on Bank of Baroda.
Mahesh, I would give anything to relinquish my position here and sit at your conference because there are so many interesting themes. But what are you all exploring at your conference? What would you watch out for?
If you look at theme-wise discussion that we are seeing at the conference today, mostly it revolves around the fact that we have probably crossed the period of recognition in terms of peak pains. We don't seem to be seeing any new sectors which is throwing a fresh surprise. Most of the discussion that we're seeing around is on resolution, what kind of haircuts that needs to be taken, and so on and so forth. So that's one major area of discussion that we seem to be hearing from most investors today. The second, obviously, is the fact that a lot of things have happened on the digital side. Clearly, we are trying to look at the implications of these kind of major changes that you're seeing out there. It could be a revenue change, it could be a productivity change, or it could simply be that ROEs will come under a lot more pressure than what it was earlier. So people are kind of grappling with the issue of such large technology disruptions happening into the banking space, something which we have probably not seen for the last 8 to 10 years' time. And obviously, the third major issue across all bank themes or NBFCs out there is on growth. Clearly, growth numbers are just not suggesting any kind of revival on the capex side. So how do you put money into business, and how do you kind of grow the balance sheet remains the single or the third largest issue that we are discussing in our banking conference today.
That is for the banks. No, growth seems to be coming quite all right for HDFC Bank among the banking category, and among several NBFCs, they did report growth numbers. So, I mean, is it just that growth is getting stolen from one sector and going to another?
It is right. So if you look at the composition of credit, Indian banks predominantly are centered around the corporate side. And if nearly 40 to 50% of your balance sheet is just not growing, or if anything, you're seeing instances of deleveraging, it puts the entire sector under pressure. Obviously, players within that space who have disproportionate lending towards a specific sector which is growing will stand to benefit. So if you have players like HDFC Bank who have a very large share in retail, and also a balance sheet which is extremely low on impairment, it gives them tremendous amount of opportunities for them to grow. But that doesn't reflect the sector issues as a whole. So I think what we're discussing is the problem for the entire sector and not specifically for any specific entity out here.
Okay, I wanted to come back to individual stocks and ask you your view on Yes Bank, because that had this whole NPA divergence issue, right? And the stock has not recovered at all since then. In fact, from the start of the month, it's gone from what, 1650 and now just languishing around these levels of 1400. You think the street is still a bit concerned?
Okay, so there are two ways to look at it. One is that the divergence that you're seeing in the numbers is something which is quite new. So we are also kind of grappling with how the numbers will be for the entire sector. So to that extent, the first data point which came from Yes Bank was obviously a negative surprise. So we'll see through some of these numbers from most of the other public and private sector banks. But so far the discussion with the banking sector, at least the ones which have declared so far, the divergence doesn't seem to be so high, or if anything, it seems to have been well communicated to investors beforehand. So Yes Bank probably so far appears to be a bit of an exception on that front, but I would kind of wait myself out, see the annual reports coming in from all banks before kind of taking a call on this specific issue. On Yes Bank personally, on the other side of it is that we are looking at Yes Bank like a corporate sector bank out there, and most of these corporate sector banks, we have a fair value of somewhere close to about 2 times price to book. So from that perspective, you have seen a phenomenal rally in the stock over the last 12 to 15 months. I think what you're seeing out there is simply a time correction on that particular stock more than anything else. But yeah, the issues that you've raised is valid, but I think it's a little bit early for you to form a clear opinion on specific stocks.
Well, we would love to go on chat about